Hello, my name is Solène Fargeix, Marketing Manager at RSM China. Foreign direct investment has hit a record high in Poland in 2021, pushing the country to the top 3 destination for FDI in the EU. Poland has been a key location for FDI in Eastern Europe for many years due to its stable economy, skilled labor force, and advantageous location. The number of Chinese investment in Poland has been growing since Poland joined the European Union in 2004, with most Chinese investors in Poland either engaged in trade or in the industrial sector. The purpose of this session today is to identify the key considerations for Chinese investors willing to do business in Poland and take their business forward. Today, I'm joined by Piotr Liss, tax partner at RSM Poland. With nearly 20 years experience, Piotr is a specialist in the field of corporate taxation, particularly in corporate income tax and international taxation laws. He supervises projects related to tax optimization and tax restructuring, as well as tax audit and due diligence projects. Piotr, thank you so much for joining me today to discuss this fascinating topic.
Hello, Solène. Hello, everyone. It's a pleasure to be with you.
So can we start by telling us a bit about the investment environment today for Chinese investors in Poland with regards to employment law, accounting, audit, and tax requirements?
Well, the investment environment today is, of course, open to welcome any investor from any country. And we, as a Poland, never close to any investor. So we, of course, welcome Chinese direct investments. We have few of them also in area where we currently are, so in Poznań. And we see bigger and bigger interest in investing in Poland from foreign investors, mainly due to the access to the very well educated and still cheap compared to the EU workforce, but also a great availability of land, facilities, and of course convenient location just in the middle of Central Europe, as we rather call ourselves Central Europeans rather than East Europeans.
In China, we see that a number of tax incentives are available to foreign invested businesses based on the size of their business or their sector or which industry they belong to. For legal entities set up in Poland, are there any location preference, local incentives or industry incentives? What is encouraged?
Yes, of course, the government wants to encourage the investors with subsidies and some extra grants. And one of the most important one is, in fact, the Polish investment zone. It's a program that changed over years, and now it's available within all the Poland territory. So it used to be only available in the special designated zones, which you might remember that there are some special economic zones in Poland. But right now, the whole Poland is being called a special economic zone. So it is possible to invest any place in Poland and benefit from the tax exemption. It doesn't mean that wherever you invest, you will get the same tax incentive. The easy to remember thing is that eastern part of Poland is less developed than the western part. So that's why the government tries to convince the investors to invest in the eastern part of Poland. Therefore, if someone invests in eastern part of Poland, then he may count on 50% of the total investment value being returned to him in the unpaid corporate income tax. So investing 100 million will result in tax exemption of 50 million. And this exemption can be used over 15 years. So from the moment the investment is finished and it starts generating money, then it's up to 15 years to use this 50 million or 50% of the investment value of the tax exemption. The western you go, the lower the percentages. And right by the border, by the German border, it reaches, as far as I remember, only 20%. Or even from 2025, it's going to be 15%, so 15%. So, of course, the availability of well-educated people is lower in the eastern part of Poland, but still the availability of land and very good communication is also there. So it's good to remember that if it's not really necessary to have access to very skilled workforce, then the eastern part of Poland, where the exemption is the highest, might be a very good direction. Of course, it's in order to get the exemption, it's necessary to fulfill some other conditions. So there are conditions like, of course, the value of the investment, but this can be a very low one, from counting from 500,000 zloty, which is probably nothing compared to investments in other countries. But unfortunately, there is a need to fulfill other conditions, and we call them quantitative and quality conditions. The first one, quantitative, they simply tell about the value of the investment. But the second ones, so the quantitative investments, they regard the scope of the business, what's going to be produced, how the well-being of the employees will be taken care of by the new employer. So there are certain points which needs to be achieved. And for each factor, there is one point. It's quite complicated, but on the web page of Polish Investment and Trade Agency, there is a special calculator which helps to determine whether and which points are fulfilled and which aren't fulfilled. In short words, the more high-tech the investment is, the more knowledge will be transferred to Poland, and the better the employees will be taken care of in terms of everything from trainings through benefits to possibility of education. The more points there will be granted. So that is the most important and the best, I say, of course, from my tax perspective, the best incentive there is in Poland. But we cannot, of course, forget that there are also some other, like cash grants. So it is possible to apply for a cash grant. Again, this is only possible for the high-tech investment, so only in the support for those areas which are important from the view of the government. So investment in the high-tech branches, of course, everything with E in the name, and those investments are always well seen. So it's possible to get the cash grants both for employment, and there are grants for up to 12,000 zloty. So it's somewhere around 3,000 less now, $2,500 US dollars per new job created. And there are also cash investment, cash benefits based on the investment value up to 10%. This is being granted on the one-to-one discussion with the ministry. So the special economic zone and the tax exemption is available to anyone, and you don't have to go with any discussions or one-on-one bilingual bilateral discussions with ministry. You are granted by the law. Whereas in case of any grants, it's always a matter of signing an agreement with the Ministry of Development. And of course, depending on their approach and their view on the investment itself.
I see. Thank you so much for your insight. I think there are definitely some similarities between some certain industries that are encouraged and some location incentives between China and Poland, which makes the parallel, always interesting to see. My next question, one of the top questions asked by Chinese investors, would be, what about the corporate income tax and indirect tax regime to be aware of when you do business in Poland? What are the current indirect tax rates, for example? Are there any exemption with the EU? Could you give us an overview of all of these elements?
Yeah, of course. So unfortunately, the Polish tax system is quite complicated in terms, of course, of the direct taxation, so corporate income tax, as the VAT is unified across European Union. So it's a bit easier there. So starting from the income tax, the standard rate is 19%, 19%, and the lowered one is 9%. The lower tax rate is only available for the small companies or startups, as this is only available up to 2 million euro of revenues. The funny thing is that it's not like up to 2 million you get 9% and above you get 19%. The situation is different. So if the 9% is being crossed, so the threshold is crossed, then unfortunately you pay 19% from the very first zloty or first dollar earned or euro earned. So you have to pay the outstanding tax when crossing the threshold. The problem with 19% tax rate is that it looks really nice compared to other European countries, or it used to look really nice compared to other European countries, as now most of them try to lower their tax rates. But unfortunately, in Poland, there is a very vast number of the non-deductible costs. So normally the companies end up with the effective tax rate of 20 to 25% because there are very strict rules on tax deductibility. Just to say, you can't deduct all the costs of cars, personal cars. You can deduct only 75% of the costs. But there is a vast number of such different rules. So support of a tax advisor or skilled accountant is really a must in Poland. It never works with a simple sending accounts to Poland and say, hey, prepare the tax computation based on that. It's just a very good recipe for a catastrophe. So this is as to the income tax. The tax is being paid monthly. So each month there is a need to pay installment of the year to month earning. So unfortunately, in the first 2 years, it's necessary to do the tax computations every month in order to pay the tax in the right amount. And then, of course, there is a need to file the annual tax return by the end of the third month following the year end. So normally in the standard situation is going to be end of March. So as you can see, the deadline is very short. It's only 3 months after year end, which is a bit problematic for the multinational companies to meet the deadline for the filing in Poland. But this is how it looks like at the moment. So this is as to the direct tax. As to the indirect tax, so VAT, as I said, of course, the tax is being unified across European Union. Still, Polish rules are quite strict compared to Germany, France, or other well-developed countries, and which are very long, of course, in the regime of VAT. Our VAT is unified, but unfortunately, each and every mistake is being penalized, and it's being penalized quite heavily. So the VAT is being paid monthly, just like corporate income tax. The rates are 23% and 8%. Of course, for the most of the companies, 23% will be the applicable tax rate. But as a standard, of course, VAT should be neutral for the companies. So it means that, of course, selling to the Polish customers, to the Polish client, will be bound with 23% of VAT. But on the other hand, of course, it's possible to deduct the input VAT from the invoices received from the contractors. There are certain limitations in this deductibility of VAT, but thankfully, European Union said that neutrality of the VAT is the very important part. So in only very limited situations, it is possible to limit or forbid the deduction of VAT. So most of the input VAT will be deductible. So finally, we will end up, of course, paying only the difference between the output VAT and input VAT. The VAT is being paid, as I said, monthly. The reporting, this is important. Reporting in Poland is based on special audit files in XML files. So authorities gather all the data in electronic form. They verify the data in real time. So any mistakes or fraud are being caught very, very fastly. And of course, the same with the mistakes. So if there is a mistake, then the authorities often send a letter, hey, you reported something, your supplier hasn't reported something, please correct this, as it might be an issue with the VAT.
Thank you very much for all these details. I really like to highlight what you mentioned about having complicated tax systems and very stringent regulation where the tax authorities will basically be flagging any sort of mistake, because it's also a similarity we have here with the local Chinese authorities. I think globally we see that tax authorities are tightening the regulation also when it comes to withholding tax, which can obviously be a tax risk for any business. What would be the withholding tax rate applied for certain outward payments in Poland? So let's, for example, are there any conditions where reduced tax rate may be applied in terms of service fee or interest or royalties or capital gain?
The withholding tax in Poland is quite rigid. So we've got 20% tax rate for all the service fees, interests, royalties, and 19% on the dividends. But this is, of course, under the double tax treaty rates. So if it's possible to benefit from the double tax treaty, then the rates are way lower. And looking at the China's double tax treaty, I can see that most of the tax rates will be down to 10%. So any payments for interests, royalties will be taxed at 10%, whereas the service fees, so management fees, R&D, legal, accounting, and all other supporting fees, they will be exempt in Poland. So the standard rule of the enterprise earnings will, of course, be implemented, and such payments will be transferred without any withholding tax obligations. What's important, in order to apply the double tax treaty rate, it is necessary and obligatory to hold the certificate of tax residency. So Polish company needs to receive valid tax certificate from Chinese tax authorities, and this certificate is valid for 12 months. So in fact, every year there is a need to apply for the new tax certificate in order to benefit from the double tax treaty with China, of course. On the other hand, if the payments are being done to Poland, to European Union, sorry, then of course it's possible to benefit from the EU exemptions. So if a Chinese enterprise create a headquarter or holding company somewhere else in Europe, and then this holding company holds shares in Polish firm, then of course the payment that will go to the holding company will be under EU regime. So it's gonna be tax exempt in most situations. The authorities implemented new rule from 2022, so it's quite fresh, where the payment exceeding 2 million zloty a year, so not a single payment, but all payments done in 1 year to a single foreign entity, when crossing 2 million zloty, will fall under a special regime, under which the rule is collect and refund. So pay and refund. So none of the exemptions, either from the double tax treaties or from the European Union directives, applies, and it is necessary either to pay the tax and then apply for the refund, or the Polish company may apply for a special so-called permit. It's a decision, so it's a permit granted for 2 or 3 years, where the authorities say, okay, we agree upfront to the certain payments that you will not be collecting the withholding tax. So more and more countries are looking at this withholding tax issue and money leaking somewhere else outside without the withholding tax, and Poland has taken the steps to close as much as possible of those leaks. Of course, looking at on the bigger figures, so the payments to Google or other small payments, they are off the list. But the bigger payment above 2 million, they should always be carefully verified, and in best case scenario, the application for the permit should be filed.
Once again, I think we need to highlight the importance of being well surrounded by a team of experts for all these elements. I guess one last question, what is quite common for Chinese investors is also when it comes to the key tax rules for related party transactions. For example, business with the China parent company. Are there any key considerations that come to your mind for this aspect of doing business in Poland?
Yes, of course. Any transactions with related parties must, of course, be done at the arm's length principle, so at the market values, at the market level, and no differences, of course, in Poland. So one thing is that the transactions should be done at the arm's length principle, but on the other hand, there are some, of course, reporting obligations in Poland. As to the reporting obligations in Poland, there is a need to prepare a transfer pricing documentation, which is an annual obligation, and this must document all the transactions which exceed certain thresholds. So for the goods transaction, it's going to be 10 million zlotys, so somewhere around right now probably 1.5 million US dollars. As to the service transactions, it's way lower because it's only 2 million zloty. So this would be somewhere around 400,000 US dollars. The situation is that we look at the threshold per entity and per type. So if we cross the threshold for the service of those 400K US dollars, but with few companies, so let's say 4 companies, and for each we pay 100 in transfer pricing transactions, intercompany transactions, it means that we have to prepare the transfer pricing documentations for all the transactions, because in total they exceeded 400,000 as a threshold. So it's not based on the single entity threshold. You look across all the payments done in the given year. So the transfer pricing documentation must be prepared in Polish. Unfortunately, only master file can be done in English. Master file is for those entities which at corporate level, so on the holding level, exceeds 750 million of revenues. So for the big multinational firms, and probably most of the Chinese investors that would like and look at Poland. So it's good to know that those obligations are quite strict. The good thing is that the transfer pricing documentation doesn't have to be delivered to the tax authority. It only has to be prepared. It has to wait for any summon from the tax authority. So if the tax authorities would like to see it, then you have to deliver it within 7 days, and that's the obligation. On the other hand, of course, the authorities, they would love to see all the transactions in real time, but it's not possible with the international transactions. So that's why there is also an obligation to file a report at the year end. So there is a special report where each transaction needs to be reported as to the value, as to the related party, and so on. So the authorities get the information what kind of transaction there were, and of course they can easily pick those companies which they would like to verify in terms of the meeting the market value or arm's length principle transactions. So this is as to the transfer pricing obligations. Of course, all the methods which are under OECD directives and instructions, BEPS, these are applicable to Poland. So you can use a margin plus for transaction or any other method that is acceptable under OECD is, of course, acceptable also under the Polish rules.
Thank you very much for these key insights, Piotr. I think we covered the main interrogations that our outbound Chinese investors may have before conducting business in Poland. So just to wrap up, could you please tell us, in your opinion, what should Chinese companies do to mitigate risk related to their investment in Poland?
Well, the risks always there are, so it's good to benefit and use the knowledgeable service provider, both from legal but also from the tax and accounting perspective. So the first thing, of course, is to set up, to prepare a right setup for the business and the right structure for the business. So looking from the who's going to be the investor, how it's going to be set up, whether it's going to be with a parent holding company in EU and then investment into Poland with the subsidiary, or it's going to be a direct investment from China. So first of all, well thought through investment structure. Then, of course, as I said, a good and knowledgeable supplier in Poland in terms of the accounting and tax rules. You can, of course, go cheap and try to use the accountants from the very small tax offices, or tax and accounting offices. But of course, this may end up with penalties often being imposed on the directors of the company, regardless if they are Poles or they are foreign nationals. Of course, it's also good if there is an internal accounting department. Probably there could be a shared service center somewhere in China. It's also doable to do everything under the compliance rules. So corporate income tax compliance, or VAT compliance, but especially in those cases, very good knowledge of the Polish system, of the Chinese system is a must. So choosing a right partner would be the best advice in this case.
Right. Piotr, thank you very much for this excellent conversation today and for sharing with us your expertise and for taking the time to sit down and have a chat. We look forward to have further conversations on that topic, looking at the relationships between China and Poland.
Thank you very much. It was a real pleasure to meet you and to talk to you.
Likewise.